managed in Singapore have risen a strong 22% to 1.63 trillion Singapore dollars over the last year, due to strong inflows and higher market valuations. These figures show a robust recovery in comparison to 2010 and 2011, when assets under management amounted to 1.354 and 1.338 trillion Singapore dollars respectively. The positive data from Singapore and Hong Kong are also results of the budding wealth of Asia's next generation business people. Singapore is one of the world's fastest growing private banking hubs. It's now in close proximity with Switzerland, as the Swiss private banking industry has been affected by the alleged complicity in tax evasion by US citizens. According to the consulting group PwC, assets managed in Singapore could surpass Switzerland's by 2015. Another consulting company, Deloitte, reported Switzerland at the end of 2011 having 1.75 trillion US dollars managed in international private client assets. The Swiss National Bank recently became the first non-Asian central bank to open a branch in Singapore, focusing on its Asian currency portfolio. This shows more signs of the growing importance of Singapore. According to private bankers, wealthy people from mainland China are placing funds in Singapore in order to be less dependent on Hong Kong. Singapore Central Bank said approximately 80% of assets under management came from outside the country. The Monetary Authority of Singapore affirms we continue to see strong interest from global fund houses seeking to set up or expand their Asian presence. Earlier this month, Singapore tightened its rules and brought in a law to penalise banks that aid tax evasion. Further laws are in the works that if a bank were to assist tax evaders in hiding their funds, it would be a money laundering offence. Singapore's Finance Minister, Tharman Shanmugaratnam, said that the country would continue to be a vibrant wealth management centre with laws and rules that safeguard legitimate funds and reject tainted money. And that brings today's press review to an end. For more economic news throughout the day, stay tuned to Dukascopy TV.